Good afternoon, it's Francesco here from the Smart Stocks newsletter. It is Sunday the 21st of January and I'm ready to run us through our weekend review of the indexes. I'll look at the market timing indicator. That had a change on Friday, so I look forward to going through that with everybody, as well as a look at some leading sectors and some strength that I'm seeing in the market. I'm starting off with the SPY, as usual, and what a powerful, pivotal week we saw this week. You know, things can change so quickly in the market, and this was a phenomenal reminder to myself and everyone else, I think, just to stay on your toes, stay nimble. You never know when things are going to turn, where an opportunity or pain is going to happen. You know, right here, it could be, you could have been thinking, bang, we're ready to go, test that all-time high, and then we just got that quick 3-day snap-down reversal. And then here, you might have been thinking, oh goodness, this is it, the move's over. Time for us to test the 10-week or crack below the 10-week moving average, and we just rip off into new highs. Just good luck predicting. This is why I talk about reacting, not predicting. If you think you could have predicted that, or you did, congratulations, well done. I don't know if you'll be able to do that time and time again, year after year, as a trader in the markets, but if you do, and you're able to, great, but I know I certainly can't, so I just like to react and just let the market show its move, its hand, and then I follow that hand. That's how I do things. And I know a lot of other great traders do that as well. Starting off with the SPY, you know, I referenced last week the first test, you know, step number one, the first hurdle, if you like, was clearing these highs right here. That was the job number one. And we were able to do that with some serious conviction on Friday. Job number two, and the more important test for the SPY, was this line right here. If I zoom out to a monthly chart, you'll see that's the all-time high resistance. Now, what happened? The market could have broken lower here on Wednesday and marked the end of this move higher. But what happened? We just turned right around and ripped back higher. Oh, but the reason was this, or but we should have done this, or how come it didn't do that, and oh, I know it did this because... All of those things are just noise that are going to distract you. It doesn't matter. Just pay attention to what happened, to what was, and what the market did. I think that's always going to keep you safest and always on the right side of the trend. You know, we were able to hold these moving averages on this little move here. Things look dangerous and in jeopardy, and the market chose course of direction. So you better get in line with it, or you'll just be left behind. It's very simple. Leave your opinion at the door and or have one. I always have opinions, but bend them and flex them with the market and with price. You know, I'm never going to change my opinion or keep it locked in if the market's telling me a different story. You're going to lose a lot of money doing that. So great breakout here. Big volume came in on these days, back-to-back monster days here in the SPY. Out to all-time highs. If I'm a betting man, I'm going to say that we're going to probably trend higher from here with a multi-year breakout. But at the end of the day, who knows? Anything can happen. I will let price and the moving averages guide me. But great move here. We built this little bit of digestion, this little base area after a great move higher. So took a rest, a little bit of a breather for a few weeks, and off we went. So great action. Over to the Qs. Same story here. I talked about this pivot all week. As you guys know, anyone who was watching the newsletter or my videos has seen this. I know all my members have. This was test number one. Bang, we passed it on Thursday. Again, we could have gone lower here. We did not. That's information. The market's telling you where it wants to go, what it wants to do. Get in line with it. Doesn't mean you have to go 100% long or whatever, but just at least if you had a short or a negative bias, this is the day where you got to start to question it, and at the very least here and obviously there, you better be, you know, well out of that positioning and that mindset. Just bend with price. We exploded through this pivot right here. This was a 3-tested horizontal area, so it's got some significance short term, and we were able to crack that on Thursday, as I referenced in our video, and then off it went. Bang! The next test was the all-time high. We gapped above it, and we never looked back. Big volume pouring in. A monstrous price appreciation day. Let's go look at that monthly. You know, a stunning cup and handle on the monthly. Big white cup, handle, boom, off we go higher. Probably one of the best cups I've seen on a weekly chart. You know, let's look at that weekly. Big cup, handle, off we went. Above that 10-week moving average. You know, I talk about the 10-week moving average all week. I've been really harping about that on X. A lot of you would have seen my posts, but what an important tool. You know, I can come up with a list right now of 100 names that held their 10-week and bounced off that area. It is an institutionally favored moving average. The pros, the big boys, the whales, they're all looking at it. They're all using it. It's a spot where a lot of them are going to accumulate stock. And you look at the bounces in stocks like Datadog, NET, Snowflake. You know, you got Affirm sitting on there right now. Just pay attention to this level. And I talk about using it on your daily chart like I have here. I think it's a great tool. Got it from John Muchow and the idea from Matt Caruso. So I recommend that. But we are out into all-time highs. Again, I expect us to trend from here. We look phenomenal here. Just what a difference 2-3 days can make in the market. Insane. But again, happy to be proven wrong. Happy to go with price. If we roll over and this fails, then you can best believe I'll be trimming back exposure, or if I have to take stops, I will take my stops, and I'll be adjusting my exposure like that dimmer. Slowly adding, slowly reducing, never all in and never all out. Just bending and flowing with the market. But a phenomenal move, and patience was rewarded. If you are looking to make a trade, perhaps a long in futures, I trade futures myself personally. I have a position here. I am long futures here. That's something that I do not do within the newsletter. I like to keep that just equities because of the leverage and volatility being a little bit risky for perhaps some newer traders. But a beautiful move here, higher, straight through this pivot and straight through the all-time highs. It doesn't get stronger than that. Not much to think about. I wouldn't really question or argue with it. It is what it is. Onto the IWM. The Russell looks really, really interesting here. I'm seeing a potential setup taking place, actionable for tomorrow, which is a nice, clean trend line breakout. Okay, I've been talking about the 10-week and the 50-day area needing to hold. For now, we've seen some great support in this spot. Let's see if we can crack through these moving averages, get a move higher. Good to see some volume coming in Friday, closing upper end of the range. Next step is to just simply confirm crossing back above those moving averages and getting their direction pointed upwards. You know, the same way we are seeing on the Qs and on the SPY. That's going to get us back into that bullish trend, put us on the buy signal, and you've got some opportunity. You know, we had a pretty great run, we cooled off a bit, and now perhaps is going to be the next leg higher. I don't know, but as always, wait for confirmation. Front running this move, I don't think is worth it and makes no sense to me. So, yeah, I'll be waiting for confirmation, but the Russell is holding support where it needs to. The next step is to just cascade through that trend line and the moving averages. Over to now our sector review. A couple of things that I'm seeing that look really good. Apologies. Semiconductors. I mean, this chart speaks for itself. Look at the volume. You know, I referenced here. I posted on X. I think it was a couple of weeks ago, or last week, or the week before, about the 10-week moving average. Is it a healthy 10-week moving average test? You know. Came down on lighter volume than below average volume, and then we just springboarded off this moving average. Again, why is it such an important moving average? It's institutionally used, and the institutions are the guys that move the market, not you and I. So amazing breakout, led by obviously the likes of SMCI, Nvidia, which were long, you know, phenomenal stocks, looking really, really good. Powerful sector. This is what I believe is the number one sector, the number one space. And some of these stocks are in phenomenal shape and in beautiful trends right now. Next up, we've got the financials, the regional banking ETF, pulling into that 10-week and hammering. Interesting spot. Let's look at the daily chart. Got that bounce into the 50-day, as like clockwork almost. Bang, straight off it and ready to move higher. The mid caps off the 10-week looking pretty interesting. And the home builders as well are digesting huge moves up. We saw BLDR break out Friday, and I believe its peers could follow suit, depending on what happens with interest rates, most likely, of course. Over to our market timing indicator. It is Sunday, so I am excited to share this with everybody, not just members. But basically, we had a little bit of negative, you know, we haven't been doing too much trading. We've had some negative price action, breadth that's been deteriorating, dropping off, net lows crept back into the market all through this period. So we haven't been doing too much buying in the portfolio. Our open positions have been ripping, advancing beautifully, making really nice gains. And that's the nice thing, that when you're uncertain about what's going on in the market, or let's just say you don't have all your ducks in line, then it's okay to do little or not too much, because guess what? If you have some exposure open that's working for you, and the market does turn and take off higher, that exposure is going to likely benefit. So that's the beautiful thing. Instead of being in a precarious spot where you're like, ooh, I don't feel too good about the market, something's a little bit off, I like to see my real fat pitch when I have my conditions aligned or my criteria really there and fulfilled. That's different. It's okay. If you have something on, you're going to benefit. Just like here, you know, if you flip back to, if you flip back to Wednesday morning, I think most people were thinking, goodness, I hope I'm in cash, or I hope I don't have too much fresh exposure. Anybody who had fresh positions added heavily Monday or Tuesday likely took stop losses on Wednesday. In fact, I would guarantee it. A lot of names shook really, really hard on Wednesday. Okay, so for people thinking, oh, I feel like an idiot that I missed this 2-day rally, you didn't miss anything. The market just moved real quick, real fast. And if you had some stuff on, you benefited from that. And if you didn't, it's okay. There's always going to be more opportunities. We all know this. But just something to be aware of. Don't sell yourself too short or be too hard on yourself. Very important. So we're being cautious here. But basically, great to see us move back into a yellow signal on Friday. Net highs came back into the market, indicating we were able to put some exposure back on now, using the principles of progressive exposure, starting off with one position. If you can see some traction, go ahead, add a second name, but only if we're seeing traction and movement in the portfolio. But I'm really happy to see this change and be confirmed by some powerful moves in leaders in our own positions. You know, all these little tools stacked together. The indexes are above rising moving averages, and you know, my studies and my beliefs are that that's the best time to make money and be long. Look what happens when you're above, you know, rising moving averages. It's pretty straightforward, pretty clear cut that I believe that's the time to really be aggressive in the market. So things are looking really good here. This likely will remain hopefully yellow tomorrow and into the week, and maybe even head to a green if we can get that breadth thrust and things coming back into the market. If that Russell can bounce, we're likely to see much more health across the board and the market in general. So looking really good, a great end to the week. Leaders look phenomenal. I'm going to now run through all of our trade ideas, review the action for last week, go through our watch list, look at the portfolio, how that's all looking, and as well as diving into that SMCI EP setup. So yeah, please tune in if you would like to by subscribing. Thanks for watching, guys. Have a great trading week. We'll see you here again this week. Ciao.